Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about the fact that the market is really anticipating a certain date in April and this happens the day after April Fools. And they were worried that the market might be fooled, but in recent developments, it may look like Trump has done a U-turn. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should be ever taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, indeed, is April the 2nd. It's supposed to be a day long remembered. But what is April the 2nd? What's happening on April the 2nd? Well, April the 2nd is apparently Liberation Day for America. And this is basically what Trump had to say about it. He said April the 2nd is Liberation Day in America. For decades, we have been ripped off and abused by every nation in the world. Now, it's finally time for good old USA to get some money and respect back. However, reports are now coming in that these tariffs, which we are expected to be announced on the 2nd of April, are now expected to be more targeted. In fact, the Wall Street Journal, they reported over the weekend that the White House is looking to apply tariffs on about 15 nations with persistent trade balances with the US. These are the countries which have obviously a big trade surplus with the United States. Now, these have been called, wrongfully or rightfully, the Dirty 15. And this includes the likes of the following. Get a bit bigger. China, which is at the top, EU, Mexico. Let's make it so everybody can see it. There we go. Yes, let's start again. So China, EU, Mexico, Vietnam, Taiwan, Japan, South Korea, Canada, India, Thailand, Switzerland, Malaysia, Indonesia, Cambodia. To name just a few, and one more at the bottom. Oh yeah, South Africa. There we go. I couldn't see it. So these targeted tariffs have basically given the market a bit of relief, because at the point we thought on the 2nd he was going to, do tariffs on almost everybody, for this whole tariff drama, this whole tariff thing. It's all been about, I'm not holding back, especially after his speech, his Liberation Day speech, about, Liberation Day for America. Everybody was going to be attacked. Every country's taking, the mickey out of us. Every country's ripped us off. But these targeted tariffs is now expected to dampen the overall economic disruption. So, what does this mean to the markets? Well, in a nutshell, there is much rejoicing, as the markets have basically bounced amid hopes of a dialed down tariffs. Maybe this is not as bad as we originally thought it was going to be. Maybe this is not so drastic. Don't forget, we talked about it last week. The number one biggest threat on investors' minds, which could bring the United States and the global economy into a recession, was tariffs, was a trade war. If we have targeted tariffs only on a select few or 15 nations on selected goods, it's not so drastic. It's not indeed end of days as the market was scared or was anticipating. But anyway, let's have a quick look at the markets, how the markets have reacted on this sort of news, which is broken this weekend. Let's start off, of course, with the S&P 500, who have had 4 weeks of losses. It ended last week with an actual gain for a change after 4 weeks of losses. And as you can see, on the back of this slight relief, this much rejoicing, it's opened indeed with a gap. I'm currently trading at 5,761 points. Okay, NASDAQ, the same, opened with a gap higher, currently trading at 20,159 points. We'll look at the Dow. Where is it? There's the Dow. Look at the Dow. The Dow is the same. It's opened with a gap higher. So all in all, the market has rejoiced. If you look at the Max 7, which have been, let's face it, under so much pressure over the last couple of trading sessions, let's start with Meta, open higher with a gap. Microsoft, open higher, slightly higher with a gap, but obviously came down from the big high it bounced to. Amazon, excuse me, opened higher with a gap. Alphabet, opened higher with a gap. Nvidia, opened higher with a gap. And the big one, which we've talked so much about over the last couple of weeks and a lot of videos, I've done a lot of videos on this one. Tesla opened higher with a gap. And as I currently speak, is currently 9.58% higher today. So you have to ask yourself a question. You know, obviously the market's been driven by these tariffs and this trade war threat, hasn't it? It's been obviously driven by this. Did Trump do a U-turn? The CEOs of all these firms, of all these industries, get hold of him and said, look, this is going to really damage not just the global economy, but it's going to damage us. It's going to hurt us. So he's done a slight U-turn, not completely, but a U-turn which is slightly less scary to the market than it was. But here's the other thing. Here's the other thing we need to think about as well. This whole drama over the last month or so, from February onwards, really, this tariff flip-flop, it's been so unpredictable. So even now, this slight relief the market is possibly feeling because it's going to be targeted tariffs, not tariffs or a full-scale trade war with everyone. It could change. You know, it's really a case of will he or won't he? At the moment, the market is rejoicing. We're enjoying it at the moment. Let it enjoy it at the moment. It needs it. You know, we've needed some positive news in some ways. But again, like I've said before, you know, at the moment, it's like watching an episode of Friends. Will Ross and Rachel get together? Will they, won't they? It's very much like that. And this is really what is driving the market so much. But, excuse me, if we can get away and stop talking about tariffs, there's other things which may start playing on the market. And that is, of course, recession threat. It's still on the minds of the market. It's still there. And this is what this week is potentially really big about. Unless we get any more developments about the build up to Liberation Day for America happening on April the 2nd. We've got economic data here pointing to something else which we need to be aware of, potential recession threat. Now, JP Morgan analyst Bruce Kasman says there is a 40, in his opinion, there's a 40% chance of a US recession. And we don't need, or we can't forget, key economic data. We really can. We're distracted by the trade war or this tariff news and this and that, but we need to look at key economic data and take into account as well that which maybe we can now start focusing our attention on. Like today, for example, US Global Services PMI was announced at 49.8%. Well, not percent, sorry, 49.8 versus 51.9 expected. And that's just today. The rest of the week, we got massive news we need to pay attention to because we have a really big week ahead. Starting, of course, which I think is one of the big ones this week, which of course is going to be US consumer confidence. Now, that expectation of that is going to be announced at 94.2 versus 98.3 previous. Now, don't forget, okay, that previous reading of 98.3 was the lowest level in US consumer confidence in more than 2 years. Okay, more than 2 years. Now, I know I did a video on the broadcast on Friday. We discussed about surveys versus hard facts, economic data. But sentiment is still really important. So we still need to look at this. So this is going to be a big event, in my opinion, coming up for sure. Other things coming up this week, which we need to bear in mind as well. We have obviously US durable goods. You know, their purchases of bigger items like cars, jet skis, rocket packs. You know, I'm joking about the rocket packs, of course, or jet packs. They don't actually exist yet. But we're talking about big physical items. Okay, expectation is for US durable goods to come in at 0.6%, negative 0.6%. The previous reading was 3.1%. As well as that, on Wednesday, we do have UK CPI, and UK is an interesting one actually to look at. I will do a bit more on the UK tomorrow because it's interesting development with the UK. But anyway, yeah, they had the UK CPI, which is expected to come at 2.9% versus the previous figure of 3%. Then Thursday, we have the other big event. Again, something we really need to pay attention to instead of trade and tariffs, hard facts or hard data. Of course, it's the US GDP, expected to come in at 2.3%. The previous number was 2.3%. So we're not expected to see a lot of growth on that. And finally, wrapping the week up, we have UK GDP expected to come in at 0.1% versus the 0.1% previous. But anyway, let's have a quick look at some of the other assets in the market. In particular, I want to have a quick look at gold. Surprise, surprise. You know, those who watch this broadcast know I always talk about gold, but I'm noticing something. I want to talk to you and share it with you, see what you think. Anyway, let's start off with obviously the currency. Let's look at the euro first of all. On the day, for example, let's look at on a longer chart on the day. Okay, slightly down. This is the fourth day of losses against the greenback. Still holding though above the 1.08. Obviously, he's had a boost before the last 4 days, mainly down to a weaker US dollar. We are seeing a bit of US dollar strength on the back of obviously this targeted tariff, giving the sort of a bit of relief to the market. But it's still holding above the 1.8 level. Cable is the same, slightly better performing than the euro today, up slightly against the dollar, and still way above the 129 level. Now, what I wanted to look at, which you've guessed it, is gold. Because gold now is down, and it's been down in the last 3 trading sessions, which is not surprising. As before that, it's hit higher highs. So it's not surprising we are seeing a bit about a profit taking. Now, here's the thing I want to mention. Obviously, we saw the stock market, S&P perform better, and the Max 7 performed better. And though gold is under pressure slightly, it's still trading around $3,012, so it's way under the highs by about $30, $40 or so. It's still maintaining above the 3,000 level, so it's still attaining potentially this pretty, interesting trend line, which has been above for ages. But what I wanted to have a quick look at, and I haven't done it completely yet. I'm going to look at it a bit more deeper than that. I'm just wondering, and again, this is open forum because don't forget this is live. So, I would like to hear your opinions and your views on this. Now, with the fundamentals, if we talk about, say, like this tariff stuff, it's targeted and it starts to calm down. Okay, we obviously got a peace deal, or hopefully a peace deal with Ukraine and Russia. It's being negotiated in Kingdom of Saudi Arabia as we speak, or they're trying to do negotiations, but it's looking a little bit more hopeful than it was several months ago. Don't we discuss economic data from the US? Okay, GDP is supposed to be the same, so not too drastic. It's only consumer confidence, which is wavering, but maybe consumer confidence, which might start to go once this trade stuff starts to calm down. I'm not sure yet if whether or not potentially I'm looking at the highs of the gold at the moment at a fifth wave of the Elliott wave theory. I'm not 100% sure as of yet if I can see it. If I'm looking at it daily, I need to look at it a bit more closely. Potentially wave one, wave two, which is, again, you've got to remember, it's got to close above the beginning of wave one. This long thing here has definitely got to be potentially wave three, then wave four, and then, of course, the final push of wave five before potentially we could get the ABC correction pattern. This is, like I say, this is maybe if the fundamentals stand up, potentially. Again, if you look at it a weekly as well, I'm just finding this interesting. I want to know what your opinion is, what you think. We've got potentially, again, if we have a look at it, wave one, wave two, wave three is the big one here. Remember, wave three has always got to be the biggest. Potentially wave four, and then finally wave five. Again, it's just holding above that potentially key trend line. So anyway, I'm not totally convinced that I am seeing the Elliott wave, but I'm not completely ruling it out. I need to look at it a bit more. But let me know what you think. Let me know what you think, because I'm seriously thinking, like, with the fundamentals and the run we've had on it, maybe, just maybe, we could start be seeing some form of correction potentially. I don't know for certain, of course. I don't know. If we all knew, we'd be all very rich people, but we don't. But I'm good. It's something interesting I want to share with you, and I really like to know your opinions on that. Anyway, like I said, we got a really big week ahead of us this week. US consumer confidence, which I think is a biggie. US durable goods, be interested to see that. UK CPI, US GDP, and UK GDP. So a big week ahead of us. And as always, of course, any more developments on this trade war, this tariff threat. Is Liberation Day really now going to be not that scary at all? The market's hoping, because the market, like I said, has been doing much rejoicing today. And those bulls out there, long may it continue for you. Anyway, don't forget, this is, of course, a live show. So if you're watching me on YouTube, by all means, ask me a question, share me your thoughts, your opinions. Let me know what you think. Let me know what you think about gold. Let me know your opinion on it. Let me know what you think. As well as that, let me know what you think about Liberation Day for America on April the 2nd. Or simply just say hi. And if you're maybe watching the show afterwards, because a lot of people I noticed watch the show or watch the recording afterwards. They don't watch it live, but they go back and watch it on YouTube or Twitter. They watch the recording. If you do that, you have a question and you have an opinion, by all means, put a comment below. I will see it, and I will reply to that comment next time I go live on air, which, of course, is every single day around this sort of time, a little bit after the US opens. We can discuss how the market is reacting. Anywho, if you are watching me on YouTube, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you like this type of content and you can put up with me, by all means, give me one of these. The same if you're watching me on Twitter, now known as X, obviously, and you like this sort of stuff, by all means, give us a little heart, if you like, of course. Anyway, if there is no questions or nobody wants to say hi or share their opinions, which is cool, which is not a problem, obviously. Don't forget, I go live every single day, so feel free to watch or join me. As well as that, as a side note, I will be doing a specialized webinar this week as well. I do a webinar series called Market Bites webinar series every week. Usually it's Wednesday because of we have a bank holiday over here tomorrow. I'm pushed it back to Thursday. So it'll be a Thursday. This webinar I'll be doing will be a special one because it's been more of a sort of a case study on fundamentals to stocks. And I'm going to be looking at Tesla and then having a conversation with you good people where Tesla could go next. According to the market, it's doing very well so far today. Anyway, if there is no questions, not a problem. Not a problem. Now, anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.